Is China's 2020 equity rally a game changer for the country? China started 2020 on the wrong foot. It now seems, judging also from the performance of its equity market, that China has exited 2020 in a better standing than any other major economy. Or has it really? For sure, China has attracted massive capital inflows as the country did manage, within months from the eruption of the coronavirus crisis, to control, if not eradicate, the virus. In the second half of the year, the Chinese economy was all but back at full capacity. But were those inflows really something new? Yes, China did attract $150 billion into its capital markets. But over the last 4 years, yes, those were the Trump years, China already managed to attract more than $600 billion, mostly from US investors. In fact, also as a part of the US trade negotiations, China moved on in opening its capital markets and promoting their inclusion in international indices. This process is not over yet. After all, the share of foreign ownership of Chinese securities remains very small by almost all international comparisons. As for the performance of Chinese equity markets, the mainstream Shanghai index did manage to beat the S&P 500 by 10%, whilst the technology-heavy Chinext has beaten the Nasdaq by a similar margin. With the global economy now on a recovery path, Chinese stocks could keep on doing well, but stocks of the economies that have suffered more might, at least in the near term, have a bigger catch-up potential. But what about the longer term? Well, a financial market in which there are so far only few global players participating, such as China, has obviously a huge potential. It is also riskier. The major risk is the continuing deterioration in China-US relations, with the Biden administration unlikely to be kinder than Trump when it comes to trade, let alone when it comes to access to technology and financial markets. It is perhaps worthwhile to point out that the Shanghai index is just above the maximum it reached during its short-lived 2015 bubble, whilst the US market has since delivered almost 80%. You can of course interpret that as a confirmation, in relative terms, of a higher potential. Equally, it tells you that China equity investing remains fraught with risks. Indeed, the dismal performance of Chinese equity markets over the last almost 6 years puts, at the minimum, in a more sobering context, the bigger statements about a China equity market breakthrough, supposedly the fruit of a new Chinese economic miracle.